Hey, what's up? This is DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so, this is pre-market prep for Wednesday, April 30th. And here we're just going to go through the usual tickers, beginning with the UVIX, which is the 2x long VIX futures ETF, which closed yesterday at a price of $42.70, being down 2% on the day. But now it looks like it's bouncing up to around $43. In the pre-market, it did hit a low yesterday of 42.38, and we have gotten another close below this yellow line here at 44.42, corresponding with the low here from April 9th, big red candle day here. And we have been trading and closing below that, or just above that 42.44. We closed just above that level, it looks like. Sorry, I'm a little bit tired. And actually that doesn't make sense. 44.42. Sorry, I'm getting that 42 and that 42 switched around. So yeah, been closing below that level, nearing this downtrending light blue line, which is the top of this parallel channel, and also this purple diagonal. And I think that the UVIX, the VIX, the volatility index, could be bottoming here before the next rally. And I believe I talked about this yesterday, but from right around current price, going up to this thick red line here, that's about 27% move to the upside. Getting up to that red line, that's about a 50% move to the upside. So yeah, I think that there is a lot of potential for a swing with the UVIX. And before I do switch over to the VIX, let's just see here, looking at the volume. The volume did come down yesterday. Yeah, so volume's been pretty light as it's been pulling back. We get a surge in volume. This could be launching. And also, we can see here in the MACD that it has been negative. It has been red. And let's see, it is still getting more negative, but maybe we start to see that get less negative, start to turn around, and then we could be looking at, a point like over here before it took off. But I suspect, will not go off, so high here, which did go up over 260% from the low to the high. But, if we get a 20 to 50% rally, I'd be excited about that. But then here real quick, let's just look over at the 10-minute time frame just to see how it traded yesterday. It looks like from the gap down into the pre-market yesterday, so on the 29th, did rally during the pre-market before selling off during market hours, and then holding where it retraced to into the after hours. No gap up or gap down really into the pre-market, although, no, actually, it does look like it gapped down here. Let's see. No, it gapped up and then gapped down. Pretty interesting, but really, it's just been holding that level. So right around 43, seeing that low of 42.38 from yesterday. We will see if we do actually start to put in higher lows, continue to put in higher lows. 41.95 was the low on Monday the 28th, then Tuesday the 29th, the low was 42.38. Excuse me, very interesting to see that. But now let's flip over to the VIX. This is the market volatility index. Closed yesterday at 24.17, being down about 3.9% on the day. And let's just compare that with the UVIX, which is only down 2%, so kind of a nice contrast there. And we can also see with this, we have 1, 2, 3, 4, 5, 6 red days. Maybe we start to put in a bottom before this rallies. We hit a low yesterday of 23.76, which interestingly is that exact orange line that I have marked there. And let's see where this alert is at. It's actually at 24, just being a whole dollar number there. But yeah, 23.76, 23.76 being the low, and that, of course, corresponding with the high here from September 6th, which was the second peak that we saw after this big move, and so we just got into this kind of cycle of ups and downs. As you can see, I've kind of highlighted here with the UVIX, but now we are above that parallel channel. So, is that going to be a little bit different? Are we not going to be bouncing as we do pull back to it? But I think that we could be looking for some upside moves here pretty soon. I suspect it won't be going back to 60.13, which was the high on the VIX, hit on April 7th. But we could be, like I said, getting a 20 to 50% rally with the UVIX. So I think that could be kind of nice. And so for me, myself, with this, I don't have any UVIX, but I have placed some buy orders right around yesterday's close and a little bit below, coming down to around 40, thinking that might be acting as the bottom, but that it might actually come a little bit lower, down to around $36.90, maybe $30, which would correspond to this orange line here. And just a little bit of consolidation that we had there, the dip that we saw here before the rip. I think that we're looking at some nice dip buying opportunities where we are currently at, but it could continue to fade lower. So just trying to be patient with that. But then flipping over to the SPY, this is the S&P 500 tracking ETF, which closed yesterday at $554.32, being up about 0.6% on the day, but pulling back about $1 in the pre-market. And so we can see that we have it now closed very clearly. Actually, this is the third close, but this one the clearest close above not only that 1618 from this retracement up here, but also that uptrending line in orange. And so I'm wondering if we do make a little run for 564, 564.50 to fill that gap up there, which was the close on April 2nd, being 564.52. We get a fill from that. If we fill that gap, then maybe we get rejected from it, maybe pulling back to 550 or lower to this gap down here at 527.25. Also want to point out that double top over here before going higher. So yeah, I think that the market could go up a little bit higher, but I think it could also be rolling over here, kind of precarious with those levels there, but we are currently trading above them. And also should note this, what was the high from, let's see, Monday the 28th? The high was, let's see, over there. It looks like $553.55. So we did close above that high from Monday. So I again think that's looking good. Kind of wondering if from where we're at, we get a pullback to retest that orange trend line before going higher. But maybe not. Maybe we don't see that. Maybe we just see it roll over. We will have to wait and see. And then also, while I do have the volume up here, since I can't see it with the SPX, we can see that volume does look like it went up very slightly yesterday. So on Monday the 28th, volume was at 47.61 million, and then on Tuesday it was at 47.78 million. So slightly higher, did get a close above that high for Monday, so that does look good. Let's look over at the 10-minute time frame to kind of get an idea of what's going on over there. The past couple days, have been putting in higher lows progressively, and from yesterday's pre-market, did get a gap up, then filled that gap during the pre-market, kind of bounced lower before going up higher, and then holding those gains, actually fading a little bit more than I expected into the after hours and pre-market. And then if we go back over to the daily, just wanted to look at the MACD here. That does look like it's pretty green. It has been progressively getting more positive. So maybe we are going to see another move higher, but maybe just like when we saw, the maximum in the MACD over here, we started to see that roll over. So maybe we do see that and get a test of 527. But then looking over at the SPX, basically the same things drawn over here, getting a gap fill and getting to that double top level over here. That will be getting to around $5,667. So we will see if we can get there. Did close above not only that 1618, but also that orange uptrend closing yesterday on the 29th at a price of $5,560.83, being up a little over 0.5%. And if we do not actually hold these levels, if we do not break up to fill this gap here, the gap to the downside is looking like it's at around $5,288. So we will have to see which way this goes. I suspect we will be rolling over, over the course of the next week, whether we get the gap fill here to the upside or not. I suspect we could be pulling back down to around that level there. And I think I drew this yesterday on the SPY, but not on, or maybe I didn't. But if we do look at the retracement over here, just being kind of approximate, 618 does correspond with a gap fill to the downside, and then getting the gap fill over here from this close, that would correspond with the 50% from this green retracement over here. Pretty interesting to see that. But now let's look over at Bitcoin, currently trading just below $95,000 a coin. I am wondering if this is going to be seeing, if we are going to be seeing a breakout above this level here around $95,143. Just being approximate, but that's the number that's up there. That is based on this Fibonacci extension here. The 100% of the distance from the bottom to the top here, going from the low up here, same distance. And so if we can get a break above that, I feel like this could be heading towards the 6 digits, getting towards around $104,000 or $5,000, which is the 100% Fibonacci extension. From over here, that is the red extension, getting back above here. And one thing that, I wanted to do, I didn't do it before the stream, but, I had these levels marked down here around 72,000 and 69,420, having those as dip buy levels. I was thinking I should actually replace those and move them to, 89,000 and then maybe 86,000. I suspect that we will not be seeing retracements like this, but if we do, those could be some nice dip buying opportunities. Again, 89,000 and 86,000, that being just above the CME gap that was formed following Thursday's trading before a couple Thursdays ago before Good Friday. That level, that CME gap, is around 85,200. But in case we don't pull down to that level, I think 86,000 could be a nice dip buy level, as that has served as kind of a nice level in the past. And then real quick, looking over at Ethereum, still holding up above 1,800, while Bitcoin is pulled back below 95,000. Ethereum is still above 1,800. And then just like we have this extension here to predict, 1845 from this little retracement here, that would be putting price around 2,000. But then bigger picture, I think we could be getting back to 4,000. I think we could be getting much higher than that to 5,000 new all-time highs later this year. So I'm feeling really good about Ethereum, although I know a lot of people are bored with it, but that's really, the best time to be buying, the best time to be accumulating. So, I am just excited about Ethereum after testing these lows around, 1,400. I think that was a technical bounce, and we will be seeing a breakout, so pretty excited about that. And then looking over at uranium here, the Global X Uranium ETF, ticker symbol URA, does look like we may be getting a little bit of a rejection here, having hit a high yesterday of 25.49 with a big wick to the upside and closing a little bit red relative to where we opened, but closing green relative to where we closed on the 28th. So on Monday, we closed at 25.05, closing 8 cents above that here on Tuesday at 25.13, up 0.3%. on the day above that yellow downtrend, which is the base of this parallel channel here. But I suspect we will be getting a pullback, and maybe let's just do a quick little Fibonacci retracement here. Maybe, actually, I don't know, 2249, that would be the 50% retracement, but maybe I want to add up here the 382, that would be around 2320, and that would also be corresponding with this green uptrending level based on the lows from August 5th and September 6th. Did get a test of those levels over here where it looks like we formed some bullish divergence before going up, but then breaking down. And so, yeah, $23.20 or $23. Let's see, I do have an alert here at 23. Maybe I want to make that, actually, yeah, I'll just leave it at 23. That does correspond with, these levels over here. And I might, just remove these other levels. So we just have that 382. That's where I think we could be pulling back to. And then actually that could be forming, an inverse head and shoulders pattern, which would then, let's see where that could be bringing the price from the low here, just measuring it up to the recent high. That would correspond with an approximate gap fill. And from the lows here, that represents about a 60% move to the upside. But from where we're currently trading at, that's about a 25% move to the upside. But let's say just getting to that gap fill, it's around 20%. So looking really good here, but would not be surprised if we see a little bit of a pullback retest here before then going up towards filling that gap. So pretty cool there. And I'm just going to draw that yellow so we see where it might be going. And then finally, just wanted to look over at BOIL. This is the Pro Shares Ultra natural gas ETF 2x leveraged. And we did get, really nice bounce here, but I am just looking for these alerts to go off around 40 or 37. Currently trading or closed yesterday at 55.97, being up 4.44% on the day, but not really that much volume behind it, looking kind of weak. So it does look like it very well could be rolling over, but we did see a lower volume here. But that was actually forming a bottom, whereas this could be forming a top. So maybe that's like a hangman doji, which does suggest a rollover, maybe a retest of $52, 51.54, that 786 that I have drawn over here. But really, I think if we're looking at natural gas, we should be looking at the chart over here. I don't really have too much on this. I'm just waiting for this to come down to around $2.78. So looking forward to that. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys. Have a great Wednesday trading. Cheers.